All eyes are on today's Fed decision, with market participants anxiously awaiting the results of this critical event risk. Leading into today's decision, we've already seen a massive response to the pandemic fallout, with the Fed dropping rates to zero, buying more than $2 trillion worth of treasuries and mortgage-backed securities, and implementing numerous credit easing programs. This response has also been met with unprecedented fiscal stimulus, and all of this has done a good job keeping alive those hopes for a V-shaped recovery, with U.S. equities continuing to hold up well, recovering most of their losses from the March fallout, and in some cases all of their losses, as the Nasdaq has recently pushed to another record high. At the same time, we're concerned that the outlook is far less encouraging than what investors have been hoping for, as signs start to creep in that we may not get that V-shaped recovery after all. We've already gone through that initial wave of recovery in economic data off the worst of things, and that has resulted in a period where economic data has been coming back hard and exceeding expectations. But we're now into a phase where we're still a ways off from where we were pre-pandemic, and that data is starting to disappoint again. Optimism around a vaccine has helped, but this optimism hasn't been accompanied by necessary reassurances about the timing of such a vaccine. And all of this is going on with a renewed spike in coronavirus cases, forcing state officials to reconsider reopening plans. Meanwhile, benefits from the U.S. government are coming to an end, and any future benefits in the pipeline are likely to be a lot smaller. And so all of this points to a longer recovery than what's been hoped for, and some more distressing times ahead. With that said, today will be important, and the Fed will be needing to send a message to the market that it continues to be prepared to offer unlimited support to the economy. At the same time, we don't see the Fed making any big changes to current policy, with the central bank expected to hold on the Fed funds rate and its QE stance, allowing for more time to see what updates we get from the fiscal stimulus front. On the topic of yield curve control, we believe this is something that could happen, but at this stage, we think the Fed will be more inclined to wait things out before committing to such a change, especially with the 10 and 30-year Treasury sitting where they are. It's worth noting economic projections will not be a part of today's meeting, yet another reason for the Fed to be more inclined to be buying time before committing to further action. As far as market reaction is concerned, all of this could be setting the stage for investors to be disappointed, especially with the V-shaped recovery outlook very much in question as the virus continues to cripple the global economy. With that said, it's possible we might see reversal of recent trends, with stocks at risk for retreat and an oversold dollar in position to make a bit of a comeback. That's all for now.